All right, guys. What is going on? What is Gucci? What is Gucci? Hopefully, you guys have had a good day today. I see a lot of you guys in the chat that were killing it. Not a surprise. Not a surprise at all. Moderation. Oh, never saw that before. Clear day today, chat. The thunderstorms are over, so we shouldn't have any issues today. We should not have any issues. What's good, Marshall Jorks Jordan? What's good? Right in the wave on NQ, bro. Listen. If anybody went short today and lost money, you deserve it. You absolutely deserve. If you shorted today and lost money, you absolutely deserved it. Nah, real talk, Mason. Real talk. Like, today was the absolute, probably one of the most lowest hanging fruit days I've seen in a minute. You know what I mean? So hopefully nobody in my chat shorted. Hopefully you guys didn't short. If you do, we're gonna have a talk. We're gonna have a serious conversation. What's good? Densley, 2020, Mason, Eric, MJ, Julius, Sean, Edmundo, Fernando. Listen, what do I mean by low hanging fruit? The easy, right? The easy stuff. Trading does not have to be this difficult, out of reach, impossible thing, okay? Sometimes the market will say, here you go. I'm feeling generous. Here you are. Here's a silver platter. Low hanging fruit. And today was a day just like that. I sold, but I made money because I know where to exit and to buy up. Hey, that's why I said if you shorted and lost money, we gotta have a talk. Anyone's allowed to short. You're allowed to short, you know, on the way down somewhere. I mean, the market's going to trade to two things: liquidity and inefficiency, right? So if you trade on the way to inefficiency, there's nothing wrong with that. There's nothing wrong with that at all. Now, if you hold on too long and you break even, you fucked up. If you held on too long and got stopped out, you fucked up. If you traded against a higher time frame, chances are, not always, but chances are, you're better off not doing that. You know, sometimes we make it harder on ourselves than it needs to be. So that's why I said that. If you made money on the shorts, hey, great. More power to you. You would have done better going long, but hey, if you're profitable, who cares? Blessed day indeed. What's good, Omar? What's the meaning of FAFO? It means fuck around and find out. It's a scale. It was like a meme. It was more of a video. It was a video that turned into a meme. It's this older guy from, I don't know, this had to have been 4 or 5 years ago. And just look it up on Google, FAFO scale. That's where it came from. It's not something I created. TP Tuesday's a thing now? Oh, yeah, it usually is. But I just didn't feel like typing all that out. I know it sounds lazy, but this is my stream. I do what the fuck I want to do. You know what I mean? So, I mean, I love you guys, but I do what I want here. Okay? So, anyways, let's talk about it. Let's talk about today briefly. This probably won't be a full hour. I really don't have a lot for you. Matter of fact, you tell me. What did we talk about yesterday? Right? Dow Jones is probably the worst asset to trade in the history of anything ever. We watched this engineered high, right? And we tried to see if we would get that, and then right at the end of the stream I was like, oh shit, this is turning into a bear, not a bear flag, but like it's turning into a flag, and I don't want to see that. We shouldn't really trade back down here. And of course, what do? We trade back down there. So nope, markets are not predictable, right? I guess not. I suppose not. So guess what, I got it wrong. How's that for ego? I was wrong. All right. But what did we talk about besides Dow? We talked about upside for ES. Let's say, I think it was the 1 hour, daily / 1 hour. I pointed out what the regular trading hours, those highs right there, 70, or excuse me, 67.95.5, right? Didn't we talk about that? So difficult. This stuff is so unpredictable. You're a genius. I don't think any of us are a genius. But you know what is genius? Finding what works, sticking to what works, and only trading, or like only going with that. And you're going to be much better than the average. I'll say that. Wow, Jordan. That's crazy. We talked about ES highs being a upside target. We talked about, I think that was the only one in regular trading hours, if I'm not mistaken. We talked about NQ, these highs up here as well. We're obviously not there. We still got almost 400 more points to go. But the point is, it's reiteration of the same things we keep talking about. Find the liquidity, trade in that direction. Right? Do we not say that all the time? Where's the liquidity? That's what I brought to the MLM industry, right? I know I got to keep saying that, but you know, some people think like otherwise. But anyway, where's the liquidity? Where are the orders? That's where the market's going, right? So we saw that upside yesterday, and I said, well, if you're going to long at the high of the day, that's probably not a good idea, right? If it's going to go higher, what are we going to do first? We're going to go lower first. You see that? So yeah, our equity's open, and this again is why I think today is low-hanging fruit. Stupid simple, stupid obvious. Big James, what's good? Stupid simple, stupid obvious. What do I mean by that? One of you asked yesterday, I don't remember which one of you, because we had like I don't know, like 50, 60 people yesterday, and one of you asked about like the mitigation inversion. We talked about that. And then one of you asked something about strength. You were like, is it more powerful or higher probability with some shit, something or other? And what did I tell you? I said, hey, listen, what you got to do, those really, really powerful trades are going to appear when you align the higher time frame with the lower time frame. That's not genius. We've talked about that for years. Aligning small time frame with high time frame. That's all you got to do. Right? Your higher time frame will say, you guys zoom out a little bit on a 5-minute chart, but your higher time frame pool is up here. Okay? It ain't going to go in there, or it's not going to go up there in one day. It's not going to beeline straight for that. It's not going to print one candle, you know, jump 600 points for NQ and just go up there because it's the higher time frame. That's not how markets work. The markets don't operate that way. 99% of the time, they don't beeline straight to levels of liquidity. The markets are jagged. Okay? They are jagged. And that jaggedry, oh, there's a new fucking word for you. That jaggedry is what we use to get in. What do I mean by that? If, and we're not there yet, and we're probably not going to do it today, but my point is if we are going up here, right? If that is our pool, if that is our magnet, I've seen this across the internet a little bit too. Right? Some people do this and they'll put like a magnet or something. Okay. Whatever your justification is for Oscar, if you think it's going to go lower, think it's going to go higher, whatever tool you use doesn't matter. But if you think, hey, the market is going up here based on the higher time frame, cool. Right? Now we want that in the back of our mind. We want to say, okay, higher time frame is likely to go higher. Now watch this. This is where, again, low hanging fruit. Low hanging fruit. That means the easiest trades. This is my opinion, okay? It does not get easier than this. It does not get easier than this right here and this right here. Both of those. Okay? Why? Why would I say that? Because look at this. This is yesterday's PM session high. It's like the MOC high as well. Right? And then a consolidation. And then in London, right there, we get a pre-market high. Those highs right there. And we dumped at our open. 830s right there. So our open trades lower. It's trading in the opposing direction. That's what we want. That's what we want. We want that. If it's going here, we want it to go lower first. That's how it works. That's how all this stuff works, right? Now, this might be a little bit distorted for you. Well, for us, rather. I mean, it's the same chart for everybody, but here's your accumulation. Here's your manipulation. Here's your distribution. See that? So same thing. Go back to the basics. Market trades to two things. And I forgot what the other points were off the top of my head because I don't have my list in front of me. But I know one of the other ideas, we talked about this, is AMD. Right? Accumulation, manipulation, distribution. You have a higher time frame target way up here. And then the market also gave you not one, but two more small pools of liquidity in the direction of higher time frame liquidity. Dog, I would never tell you to over leverage. I would never tell you to do that. I would never. However, going, let's say, max risk, max respectable risk, that's it. That's it right there. We're trading in what? In the direction of the higher time frame. And we are aligning the small time frame with the higher. Right? That's why, again, to me, this works so well. It works so well. Same thing here. Even if you didn't see the higher time frames, I don't know why you wouldn't see the higher time frames because you're supposed to do top-down analysis, but hey, none of us are perfect, right? Even if you didn't see, let's say, yesterday's PM high or in any of the consolidation, if all you saw was this, like pre-market highs and original consolidation on a small time frame, because this is also a market maker model. Okay, it's kind of shitty. It ain't perfect, but original, we'll say that. Original consolidation, distribution. We really don't see like a manipulation of sorts, but nonetheless, it does trade. This is that 1 hour imbalance here. Low risk buy, first leg, second leg. How would we know that? Well, you really don't, but we cross 50% there. Then we get our discount of the discount. Then we cross 50% again. And then right there, see that 50%? It's again, this is kind of janky. It stays there for like 20, 25 minutes, but 50% is a discount if you're bullish. You've heard that before too. That's funny how my shit works, doesn't it? All the shit that I tell you just keeps fucking working, doesn't it? All right. We should put that into an indicator, huh? Behave, John. Behave. All right. Well, nonetheless, imbalance right there. And then there's your second leg. Second leg is usually faster than the first. Do we see that? Yep. Wow. Funny how these rules work, huh? Funny how these rules work, isn't it? What's our low of the day at? 850. 850. Wow. Wow. Ain't that something? Ain't that fucking something? Our low of the day, 850. Wow. It's almost like ES ordered, or this is NQ. It's almost like the indices ordered an Uber, you know, every day. Pick me up down here. Scoop me up here. Done. Y'all have no idea sometimes. Not all the time, but sometimes how fucking easy this stuff is. Like, seriously, how easy this stuff is. And NQ, to me, was the weakest. NQ was the weakest. ES, to me, was much better. Right? Now, coming back to what I was saying earlier, one of you asked me about, I think it was the mitigation, and you said it was, you know, is it most powerful on something? I don't even remember what the question was, but I just remember me telling you that when you align the time frames, that's when it's the most powerful, okay? Don't take my word for it. Don't take my word for it. Go into your charts and look, right? Now, think about this. We talked about this yesterday. We talked about this 24 hours ago. 24 hours ago. That's what I told you. Look at today. This is kind of distorted a little bit because I'd say the higher like up candles are really up here in this whole thing on this 5 minute. But if we are using like this move right here, based on like the equities open right here, like in regular trading hours, it would just be that, I think. Yeah, see that? That's our regular trading hours gap. And then we drop lower, higher, and then look at that right there. Look at that. Look at that. Ain't that something? Look at that. Look at where all the wicks are. Look at where all the bodies are. Look at that. Look at the bodies. Look at all these bodies here. And none of them close below 50%. Interesting. It must be Wyckoff. Right? It must be. And then look at that. Look at that. There was your move lower. And then here's your mitigation. And then look at that. Explosion. Almost pure fucking up candles. At least on a 15. Well, the 5 minute it's going to have a couple down ones or whatever. But look at this 15-minute time frame. And it just prints higher and higher and higher. Like Creed, like that's that Creed song. You know, can you take me higher? Right? Look at that. We already discussed this yesterday. So what hindsight, right? What hindsight? I gave you the rules. I told you what to do. I said align small time frames with higher time frames. I gave you the higher time frame bias. All you got to do is look at the lower time frame and align yourself with that. You're going to take really fucking good trades. Wow. Impossible. So hard, so complex. So egotistical. Okay. It's not like any of you can't be a streamer. It's not like any of you can't come out here and do the same shit that I'm doing. Go ahead. Like literally, go ahead. No one's stopping you. Paternity leave. I'm able to focus on trade. And I'm really considering quitting my job. Making my salary in a few hours watching your videos is giving me more trust in my analysis. Well, look at that. Ain't that something? Ain't that something? Look at that. What a very, very good compliment. Good work. If I have to use the low, oh shit, here we go. If I had to use the low, high, high or low formation, can be a mitigation or inverse. It's kind of confusing for me to choose where the low is or where to start identifying it. Can you give me a clue? Listen, when it comes to indices, metals, major currencies, and blue chip stocks, it's going to come down to relative strength analysis. I don't think any of the indices, I don't think we really got, look at this bullshit right here. That's funny. Fine, I'll just draw it out then. Okay. I think I explained this yesterday, or I think I outlined this in the live stream yesterday, but let me give you a little bit more of an understanding here. The formation you're talking about, okay, is like that. Okay. You know what? Let's just do this. Let's just drag it way up here. Okay. Oh shit! I didn't mean to do that. Okay, there we go. There we go. To answer your question, when it comes to relative strength, this is what I'm looking for. Okay. This was in my book. This is in the live streams. This is in, I don't know how many videos by now. This is everywhere. Okay. Literally, this is everywhere. If this was, let's say, NQ and this was ES, I would like that. Okay. ES is trading lower, right? It's taking out a short-term low, and NQ is trading higher. ES is under manipulation. NQ is under accumulation. They are both going to go higher after that. Okay. In this scenario, obviously. Not every time you see this, it's going to work. I'm not saying that at all. But if you do what I'm saying in this live stream, you're aligning higher time frames with the lower time frames, right? Lower with the higher, and you're matching them. Okay. And you see something like this, then there's going to be like either an up candle or a 2 or 3 up candles, whatever it might be. After that gets traded through, that's when those up candles become like, it's really like a reaccumulation. Its function is a mitigation, not for you, not for me, for smart money. Okay. It's for them to say, hey, listen, if you're still short, I'm giving you plenty of evidence to say you're offside at this point. So it's time to exit shorts and or get long. That's why it works so fucking well. Right? That's why this model is a fucking G. And I gave it to you years ago, many years ago. And that's why it's a banger. Because that's how the markets are coded. It's how this stuff works. Okay? One's manipulation. The other, they're both basically under accumulation. Okay? It's just the one that is more so in accumulation is the one that makes a higher low because it's refusing to go lower. So the NQ, this right here, the one that makes a higher low should, in theory, should outperform the other one. So again, backtest that. Don't just take my word for it. Go back and look at your charts. No one's going to teach you more than the charts will. Nobody. Okay? So once this low is made, there's probably going to be a intermediate term low as well. Or if not that one, at least this one will too. Once that mitigation's been traded off of, and then you see what I'm talking about though, right? Low, lower low, higher low. And then there might be like small retracements in that for like a later entry. That would work too. That's how this stuff all blends together. And it's also like a accumulation, manipulation, distribution on a just much smaller scale though. So let's say like open of the hour. I don't consider it trading lower manipulation, but it's a similar idea. Below the open of the hour, right? Hits the mitigation, probably mitigation model, and then like order flow bullish to go higher. So does that answer your question? It's just you get that low, you get that lower low, and then you get another low after that. So by the time this low formed, that one has too, because it's traded higher off of it. So that's what it looks like. Okay, even something like this. You got some lows in here from London. Right? Market trades higher, leaving behind all these highs here in electronic hours. Triple highs almost. And then goes lower. Look at that wick right here. See that wick? It's clearing out any of the stops that are here, and it's reaching beyond that. Very, very much so. And then it's trading lower. Can't get past that low. Next candle opens, goes lower to go higher. So that in itself is also like a fractal low too. Like that low, lower low, higher low. And then the next candle after that retraces. All right, open, lower to go higher. So probably not the best drawing, but I think you get what I'm saying. This time frame, not the cleanest. I think it's right there. That low and that one. But nonetheless, that's what it looks like. Okay. So with that, what else are you going to do? What else are you going to do? Yeah, Jordan, I haven't even looked at dollar, honestly. I haven't even looked at it. Oh, this is why. This looks like shit. We ended up going, and this was last week. So we ended up going back above that old high from August. We ended up taking whatever high that is. This one. We end up taking that again. That's like a soup almost. It's just a very drawn out, time-wise, a very distorted soup. But there's a high, and that is a higher high above old highs. So I would study this too. Now this obviously is hindsight. I haven't said anything about the dollar in Discord or anything. But one thing you could study. So you know how I just showed you on ES and NQ, right? When you have formations and then that next candle trades in, you know, a little bit lower and then moons higher, right? Blast off higher. You can do the same things on every time frame. Okay, all this stuff is fractal. So when it comes to turtle soup, as an example, if you get a soup the next day, so Monday, for example, you could assume lower. But notice, you probably didn't write this shit down, but I'm going to tell you to you anyway, because I want you to learn whether you want to or not. Do you remember we talked about the weekly open? Do you remember how I said, hey, Monday sometimes can be a little bit tricky because it's essentially the weekly open? Do you guys remember that? Because I had told you about that on ES in the indices. Remember I was saying like, oh yeah, our weekly open is here and we are likely going to trade higher, but it really doesn't provide anything below its weekly open to go long. So if you're not already long from yesterday's low, you know, I'm like, what are you going to do? Buy the high of the day? You don't want to do that. Right? So today, what can you anticipate? Open, low, high, close. Right? If we don't get up here today, what are we likely to do tomorrow? Same shit. Open, lower to go higher. Right? The weekly open though, okay, you can do the same thing here for dollar. Monday is essentially the weekly open, because Sunday's not counted as its own candle, at least on TradingView. So we can anticipate what? Well, if we got a turtle soup, we should then sell off. But are we going to sell off on a Monday? Probably not. It has to have what? Some sort of, well, usually it has to have some sort of movement below the open, or excuse me, above the open, sorry. Friday's close, right? That was the soup, basically. Monday, we anticipate we can short above the weekly open. And guess what? If we don't get a lot of movement or you take a loss, okay, you're going to take losses, okay? So don't ask me, how do I avoid losses? If you don't want to avoid losses, just don't trade. You'll never take a losing trade if you don't trade, right? Going into Tuesday, same thing. If this is a soup, if we're going to trade into the range, let's say this imbalance at a minimum, right? This here. And that's what you want to aim for. That's your bias. Okay, we have a daily imbalance after a soup. We're likely to trade lower. If, like Jordan pointed out into market analysis, if the dollar is going to see expansion lower and the indices are already set to go higher, well, now you have the easiest setups. The easiest setups. Dollar going lower is going to help fuel indices going higher. Look at that. Okay. Actually, I'll just hide it. Look at that. Look at today's candle. Open, lower, right? It's trading into this down candle here. Thursdays, right? That day that caught everybody off guard. Most people off guard, right? We traded into that. And we're seeing expansion. One of you asked me yesterday too, do you think stocks are done going lower? And I told you what? Well, we already took out October's low, and I'm not selling my stock. Shit, if anything, I bought more. I should have bought more than I did, but, you know, we can always say that. Like, oh, I should have sold more at the top or should have bought more at the low. But if I was going to panic, I would have sold my stock. I didn't. So how do I know when to hold stock? I already told you. We have higher time frame upside objectives, and we have gaps. We have gaps. Even though they're from the 12th, that was almost 2 weeks ago. That's fine. Those are going to be higher time frame or longer term targets. You see what I'm saying? So why would I sell stock down here, or why would I sell it after like 1 or 2 up days when there's a lot more upside to go? Why would I do that? You saw what I did with Google. I fucked that up big time. I don't even think I showed you Google yesterday, did I? I think I mentioned it and I never said anything. Or I never showed you the chart. Right? Where's Google, dog? Oh, there we go. Look at this. This is one of the biggest fumbles, like, ever. Y'all remember this, right? When we were all the way back in here, I won't put my tweet down here. I should. I ain't gonna do that. And I told you, right? I think it was in here. I think it was early June. I mean, late June. It was these lows right here. And I said, I really wish we didn't come back into, I think this was a weekly mitigation, the low end of it. I said, I don't think we should have done that. And I'm getting out of it. I still have it in my long-term shit, but like my active stuff, I did not, I got rid of it literally in here. And look what we did the rest of this year, dog. Look at this. Look at that, bro. Look at that bag fumble. 93% in 4 months, less than 4 months. That's a fumble, dog. That's a bad fumble. So it just goes to show that I'm not perfect, chat. But anyway, the point is longer term objectives. We talked about that gap too. It's just a matter of time when we get there. The hard part is, you know, either picking the low or trading the low or both, and then getting in sync with that. It's just, not to give you a whole spiel on it, but I remember they had lawsuits I didn't know about until after, right? And this was slow. Microsoft was bussing. Microsoft was moving. I was like, okay, you know, Google is way slower, way like dog shit. And I just got impatient. I got impatient with it. So I screwed that up. But still, those longer term objectives were still in the back of my mind. So when we finally got there, I was like, well, you screwed up, John. You screwed up. And then guess what? Is that a justification to sell everything? Not necessarily. Not necessarily. You saw what JP Morgan did. I'm still in that bitch. Right? 150, 160%, whatever that thing is. We could still go higher. We could still print more all-time highs. And that's exactly what Google's been doing. So, how's that for ego, chat? How's that? Missing out on arguably one of Google's best years in a long time, right? Missing out on that because I was impatient. What can you do? What can you do? Anyway, I forgot where we were going with this. I think it had to do with stock. Anytime that, like, this is one of the first YouTube videos I ever made, by the way. This was like 2015 or something, maybe 2016. It was like one of my secrets to stock trading or some shit like that. And I spoke about these gaps, gap downs, not so much gap ups, but gap downs. And I said, historically, now this is not for blue chip stocks. I mean, it can be, but more specifically, when it comes to indices like the triple Qs and SPY, every gap down has been like overcame. Every single one. We're at all time. Well, not today, but like back in October last month, as of all time highs, every gap down you've ever seen has been overcome, right? This gap down, overcome. These gap downs, overcome. All of them. Every single one. Okay. Even back in April of this year, right? These gap downs and everybody was panicking. And then we picked the low of the day to the fucking year. Yeah, nobody can do that either. Those gaps, okay, there might be a couple more that I'm not seeing, but it's like, okay, those gaps are not going to remain open. They're not going to remain open. It's just a matter of time before we get back to them. We talked about those too. I told you about all that stuff because I look for the same shit over and over again. So if the market's likely to trade into that and probably in here and then all-time highs after that, if the market is likely to do that and beyond, why would we, let's say if you bought right before that, these lows, or if you bought on that Thursday or Friday of last week, like, you know, if you're buying on the way down, right, and the market, you know, is gapping into your favor and continuing higher, why would you sell on these days? You can partial. I'm not against that. I've always been an advocate for partials. I'm saying, like, why would you close everything? Why would you close everything when we have highs right here, an imbalance, and then this gap? Like, why? This is almost free money going higher. You get me? So when you know that, it makes the future side way easier. You probably shouldn't be shorting futures. You can. But again, like I said earlier, you're going to short on days that are expanding higher. For what? For what? That's salmon activities to me. You can still get some juice out of it, but you're making it harder on yourself. You're making it more difficult than it needs to be, when you could just simply go long and hold for the close, and you'll do way better. You'll do way better. Think about it. Look at today. Look at today. You're going to tell me shorting this was better than longing that? Come on. Be fucking real. Yeah, Jordan. I'm actually slightly shocked people remember that. That was so long ago. Orange juice. I don't know if you remember coffee as well. Coffee was similar story. Orange juice and coffee, I'll never give another idea on them again. That'll never be outdone. Those moves historically will never happen again, at least in my lifetime. So we're going to end that on a high note. But anyway, no, I don't have any thoughts on Bitcoin, bro. I'm just not, it's not my forte. I don't even look at it. I haven't looked at Bitcoin in probably a couple weeks, so I have nothing for you. Oh, that reminds me. We'll do this in closing. One of you asked yesterday about Meta. And again, I didn't look at the chart for whatever reason. If you look at some of these blue chip stocks, right? And this goes back all the way to the beginning. You see these nasty gap downs from like 2018. I remember that. I think he had to go in front of Congress or some shit. There was a bunch of shit that was going on. And then it just kept sliding lower and lower and lower. And stuff like that, it looks pretty bad. And in the short term, yeah, it's going to be bad. They're going to have, 2018 was not a good year for Meta. 2018, right? They got wrecked. But guess what? Those gap downs on good stocks, it may not be in the next couple days or the next couple weeks, but eventually, right? See this? That gap, eventually, and you had to sit through all these drawdowns. That's why I don't like position trading and then looking at it every day. I don't like that. But eventually, right, it does get back to where it should have been. Or like, that target, right? It's just, look at that. Look how long that took, bro. A year. It took a fucking year to do. Okay? Same thing here. Gap down, continuation, knocking out a bunch of old lows, and then getting cheap stock on the way up, or ideally on the way down when it should go up, right? So like these are tracements in here or right here, something like that on the way up. That's not bad. There's a C8 logo right there too. Not that I'll put that on my chart, but you get what I'm saying, right? Even here, nasty gap down from February 2022, drifting lower and lower for like 6 months. And eventually, it gets back to it. You see what I'm saying? So, to me, Meta seems like it wants to do that again. Okay? Now, the problem with that is timing the low, because you saw it historically. It can drag lower for 6-8 months, a year. That's a long time. So if you want to pick up Meta in a attempt, because these are also low resistance highs at like 800 or just shy of 800. You know, if you believe in 6 months or a year from now, and that's your sort of timeline, and you think it's going to 800, and you're all right buying it 600, 26% upside, I don't think there's anything wrong with that. But that weekly chart, though, you gotta take that into account too. If it doesn't go right up there immediately, and it wants to drift like it's done a couple years, and it's gonna drift down, it's probably gonna go for the 400s. Then you're gonna have to make a decision. Okay, are we gonna buy more and aim for that, or are we not? So that's my opinion. I think Meta is a good long-term stock, but do not come crying to me if you buy it thinking that the low's been set and it's going to give you, 6 months of drawdown, and you're going to get mad 20-30%, lower or some shit. Like if you bought it and it goes for those lows, right, you're going to be down 25% whatever you put in. So don't get angry at me about that. Okay? If you want a DCA on the way down, I think that's probably a better option, but I've always thought DCA is fucking retarded. I think DCA is stupid. Okay? Now, if that's the only thing you can do, right? You've got your job, you've got your 401k, and you like buying stock every couple weeks, and that's your plan. I don't have anything wrong with that. If that's what you can do, if that's like your only option, then go with that. But otherwise, I wouldn't do it. I wouldn't do it personally. Okay. McDonald's has been the only other stock this year that's been absolutely horrendous. It's been dead, really. It's been dead. It hasn't done. It refuses to go for those highs. So, there's a very, very quick update for you. I think I'll answer this and then we'll hop off. Jorgs, I think I don't like DCAing. If you really believe, let's go to fucking Bitcoin. You guys keep asking about this shit. What is it under? I think it's crypto. You guys are always asking about this shit. About Bitcoin. Let's do some historical analysis here. I know I talked about Bitcoin in November, December of 2022. I remember that. I'm gonna have to go find those recordings. But anyway, that's a monthly imbalance. My point is this. Easiest understanding right here. You could buy it here and then here and then here and then here and then, here, and then eventually, yeah, okay, cool. You can, cash out on all that shit. Okay, that's fine. Cool. Number one, I'm not waiting fucking 2 years. I'm not doing it. Okay, who has time to wait 2 years? Not me. Okay, I'm gonna take a trade and be done in 2 hours. I don't have 2 years. Okay, not for the most part. But my biggest argument is, instead of buying on the way lower, why don't you just buy it below old lows, or buy it below old lows? You know what I mean? And in certain cases, this right here, and I remember telling people about this, this was that June low, we're below that, and that was a monthly imbalance. That is a much better buy than buying on the way down. So instead of, let's just say you have $300, okay? And you're going to put $100 in up here. You're going to put in another $100 down here. And then your last $100 down here. Okay. My thing is, well, why not just go all 300 down here? That's my point. Well, how do you know that's going to be the low? Well, you fucking don't. You know what I mean? But DCAing on the way down when you could just buy below old low or buy below old low. You see what I'm saying? So why would we sit there and then just take drawdown and drawdown and drawdown and drawdown? I just don't like it. Yeah, Mason. Oh yeah, this is going to a fucking million. And then it takes, you know, a 60% pullback. And all the single moms you fucking bamboozled are now, you know, their portfolio got fib retraced. You know what I'm saying? It's fucked up. It's what it is. So that again, me personally, that's just why I don't like it. Okay? That's why I don't like it. Like, I'm pretty convinced there's plenty of people who are DCAing on the way lower. Well, if you think it's going to go lower, just take everything off here. Why not just buy below this low? Why not buy it 75K or whatever that is, 74 or 73 or something like that? Then you're getting a very, very discounted pricing because you're below an old low. If you really believe it's going to fucking whatever, $250,000 or some shit, then why not just buy it down here? Why not just wait? So I don't know. Just again, these are just my opinions. Okay, this is how I do things, and that's why I just think it's stupid. I think holding drawdown on purpose is stupid. I think it's retarded. And if you can avoid it, then I would avoid it. And that's why, oh, still there, baby, still there. Look at that shit. We didn't really take all that much drawdown here, did we? That tweet's been on here so long that apparently my profile picture has been wrecked. But you see something like this, there's really not a lot of drawdown. Maybe like a month or so, maybe like a couple weeks. It's not really drawdown, like maybe that, but something like 2.5%. 2.5% drawdown versus what, 25%, 50% on crypto? Yeah. Come on, bro. I'm not doing that. I'm not doing that. So I would rather much do that. Okay. And then look at this. See where we're at? Look at that. That's fucking beautiful. That is glorious right there. That is glorious. So anyway, with that being said, that's all that I got. I'll put out a market review later this evening, as I do every Tuesday and Thursday. But trading does not have to be hard. It doesn't have to be difficult. Okay, what we're looking for, we don't want to necessarily make everything easy. We're not trying to do that, right? I'm not trying to give you this false sense of, well, trading is difficult. Well, it is. It is. I'm not saying that trading is easy, but we want to make it easier. You see what I'm saying? You shouldn't be in here on 1 minute charts trying to trade every fucking 30 minutes. You see what I'm saying? You shouldn't be trying to trade every single freaking day. Let me find something. You need to fucking relax. You need to wait. You need to practice patience and allow the market to form liquidity. And then you got to be patient to allow it to trade lower. And then you need to have a little bit of cojones here and understand, okay, well, this is bullshit because The market's supposed to be going higher. John said yesterday it's higher time frame bullish, and I see these highs too, but now we're lower. Now I'm second guessing myself. Why? Why are you second guessing yourself? It's supposed to do that. It's supposed to go lower before it goes higher, broski. You know what I'm saying? You got to order your food before they bring the plate out to you, dog. Takes time. You want the market to go lower so you can get a discount to go higher. These are the easiest trades you'll take, bro. These are the easiest ones. Small time frame liquidity in the direction of higher time frame liquidity. You're going to take good trades. I'm not saying you're going to take sniper entries. I'm not saying you're not going to take drawdown. You might take some drawdown. There's nothing wrong with that. Drawdown's not a dirty word. That should be a good title too of a stream. Drawdown is not a dirty word. Now, someone who wants to be a sniper and someone who likes to, enter on those wicks, like, yeah, that's great. It's kind of an ego thing too, let's be honest. But, buying at 50% and then taking a little bit of drawdown is not that bad. And then boom, straight to TP after that. Once the expansion actually starts, and you'll take good trades. And that's what it's about. It's not the law of quality, right? It's not about the quantity of trades. We're not trying to trade a lot. Maybe you are. I don't want a lot of trades. I want good trades. I want S tier trades. I don't want the D setups. I don't want the C setups. Okay? I don't want that. I want the S tier and the A tier trades. I want the highest probability trades. High probability that it's going for some highs, or if we're bearish, that it's going for some lows. I don't need the biggest RR. Don't need the biggest RR. Your account, okay, I'll say this in closing. Another in closing speech or rant, whatever you classify it. Your account will grow through compound interest. Okay, it's not always about the 1 to 5s and the 1 to 10s. If you can take steady 1 to 2s, you're going to grow. Go look at the coin flip exercise. That's what the fuck that was. 1 to 2. It's good for me. It's good for you. Right? And you saw that after 100 flips, your account was up, I don't know, 30%, 40%, maybe 20%, whatever it was, whatever it is. Okay? That's compound interest. Okay? And that's what it's about to me. I'd rather take good trades. I want to be on side instead of trying to snipe a 1 to 17 off of a 15-second chart. It can be done. You've seen me do it. But I think for most people, let me ask you guys this. Drop some 2s in the chat. If you agree that you would just rather have a winning trade than a home run. Be honest. Would you rather just take a couple good trades per week or the home run? Because I can tell you what's going to happen. You're trying to go for home runs, and it ain't working too well. It may happen every once in a while, but you're either trying to catch the low or trying to trade in here with a super tight stop, and you get stopped out before the move, and it's frustrating you. But you're seeing other people, even if you don't understand the entry, but they're still taking good trades, and you're like, oh, what the fuck, man? What am I missing? That's my point, Mason. Thank you for that. Take the low-hanging fruit. Take the low-hanging fruit. It's okay. Yeah, there's nothing wrong with a swing account, Jordan. There's nothing wrong with that. So, anyways, I feel like it was a pretty good stream. I feel like you guys learned something. I did drop a lot of F-bombs, so I'll be honest with you. I did. But we'll work on it tomorrow. All right, we'll work on it tomorrow. Y'all be good, be blessed. We'll be here on Wednesday, same time, same place, same price as always. So don't do anything stupid. I'll see you tomorrow.